Hey guys, welcome back on the channel. This video is not necessarily about strategies itself, it's mostly about conviction, which is the foundation for whatever strategy you might have in crypto, but especially applied when yield farming. And why is that? So this is Cards. Cards is a project I recently found. I did a video about it. I really like it, so I bought a bag, and luckily for me, there were some farms paying really high yields on PancakeSwap. Cards is on Solana, okay? And these are just a handful of pools that I have been yield farming for the last months. So it was for me a no-brainer to add Cards to the pools that I have been yield farming here on PancakeSwap on Solana. And the main takeaway from this video that I want to share with you is that if you have a lot of conviction, you don't necessarily need to lock in permanent loss when prices go down, and you do that by closing positions and opening new ones. Now, what I did is before I had a couple of different positions worth in total $150. Then when card dropped below my current range, I closed one position and I added into the other one, the original one that I had. That is because, as you can see here, right now I'm out of range again with this one on the downside, and I'm holding 100% of my tokens in cards. So my LP position right now is at a loss because I'm holding 100% of the underperforming token in the liquidity pool. That will happen no matter what. Even if you open an LP position and you go out of range, but on the upside, you'll be left holding 100% of the token which is underperforming. So let's say if cards does a really good rally and it goes over 35 cents per token, I'm left holding 100% of USDC, which is good. I'll be on profit, but still I will be left holding 100% of the asset which is underperforming. But in yield farming, everything boils down to yield. And right now, for this past week, this position generated over $30 in pending yield. So let me show you how that looks on DEX Screener. So this is the same liquidity pool, right? In blue, it's the liquidity pool that I just told you about. In green, it's the other one. But I did open that second position because looking at the overall look of the chart, I was seeing that there was tremendous volume being generated at around $20 to $30. And I do like round numbers, otherwise I could have gone a bit lower here to 17 or maybe 15 cents per token. But I opened the second position also while I saw this rally forming. So I anticipated it and I thought, okay, there's a good chance that price will end up back into this very strong range. If you look at the overall look at the chart, this is where most of the volume has been happening. Most of the trading has been happening in between these resistance and support levels, 30 to 20 cents, roughly speaking, right? There's a huge chunk of trading happening here during 17 days. And now we are once again into that range after this dip, and we entered this range once again, and we are already in it for the past 7 days. So a whole week that I have been yield farming that position, although I have been also out of range for a while. So my original position was between these blue lines. So since September the 18th, and that until, let's call it October the 1st, so roughly 2 weeks that I have been out of range. And you can see that at some point my position was worth 60% less. But I just stayed with it because I had conviction. I wouldn't mind holding for a long term, and especially in these market conditions in the middle of a bull run. With October approaching, I wasn't planning to just change my mind about it. So I waited, and even though, as you can see, I have not been in range for the whole amount of the week. Actually, if we zoom in a little bit, let me show you. So there is actually a substantial amount of time where I was even out of range, which didn't stop the position to generate $30 in volume with $150 in liquidity. So here we see that this was 1 day in range, and then there was another rally here which left me for the next 24 hours also generating fees. And also there's some other spikes here. You see this one, it goes in range, generates fees, it goes out of range. So overall, I think it was a good bet. Just kept on holding, especially because I didn't lock in any impermanent loss when prices went low. Now, I tell you in plenty of my videos that I like yield farming with wide ranges. The reason why I did not do that this time, it's because all of these pools that I have opened here, they are high risk pools with narrow ranges. That is the sole reason why I didn't do that. But you can see here that it really paid off. And now I'm going to take this pending yield, deposit into this position, which is fast approaching the downside. You see, once again, I'm pretty much holding 100% cards because of it, but I will plan on building this up because looking again at the chart, I think this is a really strong price range to just hold liquidity at and keep on generating yield. Also, let me add on, if you're completely new to this, I keep mentioning in many of my videos, when there are these bullish candles, you will see a ton of profits. That's also why, although for the most part of the week I was not in range, I did actually manage to get some of this volume. So you see here, these lower red and green rectangles just show you the volume. And whenever there is volume, you will earn a lot in yield. And I was also betting that at this price level, so it's pretty much an extremity of the chart, right? You can see here that I go all the way almost up to all-time high. I was also then betting low liquidity there, meaning that there is less competition. So if the price did eventually just go into range, I would earn a lot in fees until more liquidity providers do deploy their liquidity. And actually that is what happened. So this is all about conviction, guys. If I had not been so convicted about holding this token, and this applies for anything, okay? I'm not telling you to go yield farm cards. I mean, do your own choices. I'm just sharing how much conviction is important in determining your strategy, and just stick with the plan and eventually it can pay out. In this case, it did pay out. Right now, we are probably on the verge of a downtrend. You see, there was a lot of correction happening. This floor here at 24 doesn't seem to be holding. So what's happening here is a clear shakeout. The token has been going up essentially since this, it's not all-time low, but since all-time high, it went down over 280%, and now it went up over 250%. Right now we are still 100% up since this bottom, but the people who are now selling, likely the vast majority of them are not people who bought here. They are just people who were attracted potentially for yield farming with those insanely high APRs that it was paying. I'm talking 4 digits APRs. Potentially they were FOMOing in because they saw these massive rallies. And that means what's happening now, this will be true for every chart. Whenever there are bullish momentums, there's going to be shakeouts, and people, some will make money, some will lose money. In the meanwhile, I plan to keep my LP positions open, generating yield. It's not gonna look good when prices go down, especially, like I said, at this point in time when the token was worth 10 cents. It didn't look good, but I wasn't really bothered about it because I had conviction. And also, even if you look at this small amount of liquidity that I have in these tight range pools, it's still somewhat diversified. Yeah, there's a lot of liquidity here in these cards pool, but it's still diversified. My eggs are not just in this basket, and also some of the yield that I've been generating with all of these pools here, I have been diversifying to other liquidity pools in other blockchains. So that's that, guys. This is what I wanted to share with you. Have conviction, pick your liquidity pool pairs wisely. If you plan to hold for the long run and the tokens you are holding have some fundamentals, a good team behind, all of those basic things, you can do really well in the long run. But this is what I wanted to share with you guys. The basics are this: have conviction, hold, don't stress. And there's a lot of things that do contribute for people to stressing out. Mainly they go all in, they didn't diversify their portfolio enough. So these are just a couple of things I wanted to share about yield farming, guys. If you have any questions, let me know in the comments. I'm going to wrap this one up. If you enjoyed this type of content, you know the drill. Like and subscribe for more. Thank you for watching. Take care. Keep exploring crypto, guys. I'll see you on the next one.